That time of the week, we talk, well, politics. Yeah, we talk economy. Absolutely. Zach Abraham, Chief Investment Officer, Bulwark Capital, joins the program. All right. Before the show, we were chatting a little bit. Make sense of all of this for me because there is not a lot of sense in this. It seems like this market is it's 1 minute it's getting ready to crash. The next minute, Trump says something, China, this, that, and the other, and it's up this, and I couldn't tell you what's going on.
Well, I mean, I think that makes a lot of us. So I'll tell you, the market action does not surprise us. I think you and I were talking about that the last time we spoke, saying, look, if you get news out that there's a deal or there's a deal pending, the market's going to go ballistic, right? And so that's not a surprise there. What I think is really interesting right now, though, is this is just a move of euphoria. I think part of it could have been a short squeeze, because when you look at where markets are trading, and I want to say as of today, I think you're trading at 28, 29 times earnings here. That's an incredible amount of good news priced into stocks, right?
Yeah.
And regardless of how this Chinese U.S. debt or deal plays out, it certainly sounds constructive. So definitely I understand a bit of a relief rally. That makes a little bit of sense. And again, like I was saying, we expected it if there was any positive news. The thing that I think that investors are forgetting to do here, I think they're not watching interest rates. You got interest rates pushing back up against that level that they freaked out last time, right? I mean, you're right there. I think the 10-year closed at 4.54 today. I think you got up to, what does that put you like 20 bips away from that level where the market panicked last time? You've got a 30-year pushing 5% again, mortgage rates going back up. There's just a lot of issues, right? So I'll just keep echoing what I'm saying, what I've been saying, which is don't get rid of your good, solid, companies in the U.S. that aren't overvalued. I don't think I don't believe you panic sell anything. But, even with this run up in stocks though, Chad, here's the thing. I don't know if I ever told you this, but our analogy going into this year was if somebody said, if there was a guy out there like a carnival barker, at a fair or whatever, and he was at this boxing ring and he was offering people a $1 million prize. Okay. You got to fight one of two guys and you got to fight each one of them to the finish. Right. But regardless of whether you win or lose, you'll get $1 million for fighting them. Do you want to fight Mike Tyson or Steve Urkel? Right.
Mm-hmm.
I'd rather fight Steve Urkel.
Yeah.
And so my whole thing was, look, don't panic sell your stuff, but guys, you need to get diversified. You need some metals. You need international in there. Okay, so everybody's all ginned up about the U.S. market here. Okay, S&P's up 1% on the year, slightly less. I think you're right around 0.5% on the year. Okay, the U.S. is still out of the 40 top performing countries this year. The U.S. is ranked 36th in terms of stock market performance. Okay, you got European markets up 20, 30. Poland was up 40. So I still say that. I watch all these people trying to pick it. How are we at in the U.S. market? Is it time for risk back on? Is the rally back on? And I'm like, I don't know, but I just know that there's a lot easier stuff over here. And there's a lot, juicy dividends, ridiculously low valuations. And again, not all of it. Some of our biggest holdings are still U.S.-based companies, but our U.S. exposure is probably down to 22, 23%. Which historically it's still the biggest swath of the portfolio, right? But everybody's been all US for so long. And if you think this market's out of the weeds, it's not at all. Like I said, you're gonna have nasty second quarter earnings. Now, the market may be able to look through that if you've got a good trade deal going on and there's some real concessions. But, I think that you've got to sort of dial back your expectations on the concessions front, because the only reason we're here right now in a Chinese trade deal is to some level. Now, again, we got to wait to see the deal that's out. And I've been saying this the whole time, right? But it's very hard to think that we're here all of a sudden for any other reason other than Trump capitulated.
Yeah, because he did
You know what I'm saying?
capitulate.
I'm not in those meetings. I don't know it for sure, but he had to have.
Yeah, because everybody's like, oh, we won. We didn't win.
No. China did not come to us with unilateral or offerings and concessions without us. You know what I'm saying?
Yeah,
that would have been a win.
Yeah, they didn't call us. It was a meeting, but they didn't chase us down. They were there for something else. We said, "Can we meet?" That's how this works. And the other thing, Zach, that I find interesting is I continue to go back to this. If we think they are who we think they are, which I think is very real about, the spying, all of the stuff, they want to be the A1 power. They don't want anybody else. And we think that all we hear on, from Trump and everybody else is they're weak. We've got them. Why would you go to them if you think that he is weak and they're about ready to fall apart?
Yeah, you wouldn't have. You wouldn't have. And that was, look, I said, if you're talking about the individual countries and you're talking about the economies, I think it's a very hard task to make the argument that if both parties held the line, eventually China would not be forced to capitulate first, right? Yeah. But here's the problem with that. You've got to, I was using the analogy of Vietnam earlier today, right? Which was, there's no question we were the far superior military power in that conflict, right? What was grossly underestimated was their will for a fight.
Yeah.
Right.
And our want not to fight, especially when it became a public thing, when it was just little thing here and there in the paper and some news stuff. But outside, if your family wasn't involved in it, you weren't talking much about it. It was a whole different ball game.
Yep. And I think the same is true in this situation. I think that I was never concerned, and I agreed with Trump that we can outlast. And it's pretty simple math, meaning if you've got a trade war between two countries, one's running a deficit, one's running a surplus, the guy running the surplus is going to be hurt worse by the trade war. Okay. Yeah. But culturally speaking, there are some upsides to authoritarianism, right?
Well,
meaning, yeah, it's much easier to keep your people in line, right? Whereas and Xi Jinping knows this, right? The Chinese stock market's down like 60% from its highs. You don't see anybody calling for his head.
No, well, when you don't have to worry about midterms. You are president for life. This is the advantage of the authoritarianism. Now you worry. The difference is that they may vote the Republicans out, and Trump may end up, the MAGA movement may slow down, or something may happen, and JD doesn't get it, or whoever ends up running. That's the worry of this. But you don't have to worry about being arrested and taken off to jail and potentially executed.
Right.
In saying that, he could have done whatever he wanted. I think if he wanted to stay as long as he could, the pressure was going to still be on Trump. And I question all of it. I question, why'd you capitulate? I question, why'd you get in it the way you did? We need some serious questions answered, and I don't think we're going to get it. They're just going to run around and say, we won.
Yeah, I will wait. I think from the very beginning, my attitude has been, you got to wait to see the meal, right? You got to wait to see it finished, because maybe is there the potential that there are concessions in there that we didn't think, but on the surface of it, from the way it looks right now, I think it's a really tall order to make an argument you won in any case. What it feels like to me is you kind of did a ready, shoot, aim type deal and kind of threw your weight around, and you realized that nobody was taking the bait. That's kind of what it feels like. Now, again, I would be thrilled to be wrong. I hope I am. I hope a trade deal comes out and we all sit there and go, awesome, right? Like it just sure doesn't smell like that right now.
No, not at all. Talking to Zach Abraham, Chief Investment Officer, Bulwark Capital. What does this do for, because, it's funny, a couple of weeks ago it was Biden's economy, but now that the numbers weren't so bad for, inflation, it's now Trump's economy. Okay, that's fine, whatever. But let's flash forward 30 days when now people didn't buy forward because there's nowhere else to buy. And all of a sudden those boats aren't showing up. And even with the 90-day pause, there is that, 30 days in the middle or 20 days where we're not going to have stuff going. Are we going to see things start to actually show up as a lagging indicator at the market, at the store, things like that?
I think that you're going to see, I think that that's going to be kind of a rude surprise for people because, remember right now you got 30% tariffs on, right? So yeah, I think it's going to be kind of a surprise because if you listen to, if you look at markets, you'd assume, oh, the trade war's over, right? It's not. This is an agreement by both sides to temporarily pull it back to 30 to see if they can get a deal done. So I think there is going to be some surprise on the consumer side. I would assume, like I said, I don't think that this is a market run that's going to be like the last ones we had. As a matter of fact, I'll be surprised if you set new all-time highs here. And you probably shouldn't. Meaning you're so stretched fundamentally here on a valuation basis. And so many of these companies, like for instance, you've got a problem at the top of the S&P right now. Okay. Two of your largest companies, and between the two of them, I think they make up almost 10% of the S&P 500, Apple and Tesla. Okay. Apple and Tesla have huge issues that have nothing to do with the trade war. Now, if there are no tariffs and the trade war is off, is that better for both of them? Sure. But they weren't doing well before this, and their problems have nothing to do with it, right? Apple's phone sales in China in the fourth quarter of last year were down 8% year over year, and that was with the new AI phone, right? So we've always watched these refresh cycles, and sequentially, those refresh cycles always saw a boost in phone purchases until now. And China's, I believe, their second largest market. And they are losing increasing market share. I think their market share is down to 37%. At one time that was north of 50, 55, 60, I want to say. Okay, so their revenue growth has stalled out. Another one that was alarming that you looked at Apple was their services revenue missed. Okay, now, and their phone sales were down in China again, and they missed, generally speaking, this last quarter. They missed expectations. But remember, they were stuffing channels prior to that. They were doing a bunch of phone shipments to China right before the tariffs hit to get in front of that. So I actually think their numbers surprised me how bad they were. I thought that front running the tariffs would give them an artificial boost and make them look a little better in the near term. It didn't at all. So, and then you look at Tesla. Tesla's getting their lunch eaten by BYD. This has nothing to do with Doge. This has nothing to do with tariffs. That Chinese company, their sales were down in the UK 65% year over year. 65%. You got an automobile manufacturing company. Now, remember also in the last 4 years, their margins have dropped from like 28 to 8. Okay. So they don't have any more margin to cut, which means they don't have any ability to compete with BYD on price. Okay. Everybody's like, what about full self-driving? I'm like, they're still not even approved to do it. Meanwhile, Waymo is adding an additional 250,000 customer rides like every week. Right. And they're about ready to open Washington State, New York, and I believe Florida. So when you were running Tesla up this last time to above $1 trillion, they were working with greater than 20% margins and they were still growing at like 20% a year. Now they're contracting. What are you paying for? Right. So the other problem that causes for the index is if Tesla and Apple are dead weights on the index, it's like trying to drive through mud, right? I mean, that's a big downward weight on the overall index. And, we're not even talking about other companies that are up against it as well. But yeah, it just, look, I don't, like I said, I'm never for knee jerk reactions or panic selling anything, but there's just so much stuff out there around the world, and you got to be judicious and you got to be picky. But like I said, I'd rather box Steve Urkel, man. Like,
no doubt.
There's just much other easy, low hanging fruit out there that is generationally cheap. And, speculating whether Carvana is going to go up another 20%, which is, this is a fun one. Used car company now trading at like 8 times sales, something like that. A used car company that looks fraudulent. Meaning, funny one. We were reading through their last Q, the market's celebrating it, right? Everybody's buying up the stock. Check this. I didn't even know this existed. They were extending car loans this last quarter in big numbers, extending car loans. Think about how nuts that is. Car loans are structured for a very certain reason and for a very certain period of time and for a specific reason, which is they are a depreciating asset. When you arbitrarily extend out a car loan, it tells you a couple things. First of all, your lender is in serious trouble. Second of all, who's holding that paper, right? Because you're going to be sitting on a loan that's going to be no good. And when you recoup the asset, fantastic. You got the asset. You're still going to have to take a haircut.
Yep.
Right. So extending car loans, and that helped the stock rally another 20%. You can't make this stuff up, man.
It's crazy. It's crazy. You're talking Zach Abraham, Chief Investment Officer, Board Capital. People want to reach out to you. You've got your big webinar next week. They'd be foolish not to. What do they do?
Go to bulwarkcapitalmanagement.com. You can sign up. It's free. We don't lock you into anything. You're not obligated to talk to any one of us. It's just a way. If you've heard us talk, it's a way to see what we do, how we do it in about the space of 45 minutes. Then we do a Q&A session afterwards. No obligation. If you want to meet with me or one of our advisors or do a Zoom call or a telephone call or whatever, we'll do it. If not, hopefully you leave with some more information. So pretty easy to do. Go to bulwarkcapitalmanagement.com, sign up, and it's next Thursday, May 22nd at 3:30 p.m.
Right on. You're the man. Thanks so much.
Investment advisory services offered through Trek Financial LLC, an SEC-registered investment advisor. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate, and actual performance may differ. Investments involve risk and are not guaranteed. Past performance doesn't guarantee future results. Trek 24308.